Bitcoin is on sale and investors are getting ready to buy it at a price that I will share with you later in the video. So if you want to find out exactly what the price is, then stay tuned. And be sure to gently hit the like button if you end up getting value from the video. Now before we take a realistic look at this new Bitcoin price target that everyone is talking about, let's talk about a different cryptocurrency that is having another fire sale. Because these opportunities do not come around very often. Now you see, 2022 has been the year of the Ethereum merge, but we didn't see any price action from Ethereum at all this year. Well, except on the way down, so it seems that the bear market had other plans for ETH. But the move from proof of work over to proof of stake has indeed been an opportunity to create new and improved fundamentals for Ethereum. But could these post-merge changes to Ethereum's fundamentals actually end up being a major catalyst for Ethereum in 2023? Well, I believe it is. So watch this. First, as a result of the merge, Ethereum's tokenomics are now set up to become deflationary, and the number of Ethereum created each year is expected to massively be reduced due to the move from mining over to staking in what we call the triple halving event that came from that. So this is going to see more than 90% less Ethereum created each year, which then combines with another deflationary feature, the burning of the network fees. Not only that, but the switch from proof of work to proof of stake for Ethereum has actually removed over 600,000 ETH from circulation in just the first 6 weeks after the merge. And that number is only getting bigger. And now that's over $800 million worth of Ethereum. But for Ethereum to go fully deflationary, the value of ETH burned must exceed the validator rewards. So if Ethereum can ramp up its users and its transactions consistently over time, well, it's going to move closer to a deflationary state, which is looking more and more likely to happen, especially considering Ethereum's massive DeFi ecosystem, which is playing a very big important role in achieving that deflationary mission. So basically, the more transactions, the more people using ETH, the more ETH gets burned. And that statement alone should make ETH appreciate more going forward. So now let's talk about staking here, because there's been a steady increase in the amount of staked Ethereum ever since the end of 2022. Now the chart here shows that the price action is not necessarily the leading indicator for what's happening at the moment on the network. You see, a massive amount of the total circulating supply is currently staked, and this amount is rising daily, while the total value of Ethereum staked across all DeFi platforms. And that amount did actually peak at around $105 billion back in November of 2021, as you can see on this chart here. But currently the number of Ethereum being staked is insane, and the number just keeps rising. So just imagine when we actually enter a bull market. And currently the staking rewards are at around 4 to 5%, and we are even seeing institutions like Swiss Bank launching an Ethereum staking service for institutional clients due to the increased demand for those clients. So let's not forget institutional adoption of Ethereum. You see, Ethereum's move to proof of stake has institutions interested. A research analyst at Fidelity Digital Assets thinks that the merge is likely to increase the overall levels of the interest in Ethereum for many institutional investors, and of course, the guys at Fidelity would probably know. They also noted that particularly when they're looking at a longer time frame, the interest is going to continue to grow, and it's Fidelity, of course, leading the way here in Ethereum adoption for institutional clients. So because of this high interest in institutions, Fidelity Digital Assets rolled out Ethereum training for institutions on October 28th. And this allows institutions to trade into custody Ethereum like they already do with Bitcoin. And they're not leaving out retail investors here either, so when it comes to Ethereum, Fidelity is leading the way. Fidelity is also launching a commission-free crypto trading service for retail investors to be able to trade both Bitcoin and Ethereum. So now that we have Ethereum out of the way, let's talk about what you came here for, and that's Bitcoin in the overall market, which as of now, we're still sitting at extreme fear. And everyone is still calling for a recession if it hasn't happened already. But if we take a look at the US Treasury curve conversions, it is now sitting at more than 70% inverted. And in the last 50 years of history, every time we have surpassed this threshold, a recession followed. And we are at 76% with the Fed still hiking rates and still doing QT. Not only that, but we had fund managers cashing out in massive levels, and it has not been this elevated since 2001, when the tech bubble collapsed. And currently investors and almost everyone else out there is still calling for Bitcoin to drop to $10,000, which is where many of those investors plan to buy. But if history can teach us anything, is that everyone is always massively wrong at predicting what's going to happen with cryptocurrency. And right now especially, we do have indications suggesting where the bottom might be at, or at least be close to the bottom. You see, according to this graph, the MVRV score has always proven to be very accurate in the past and could answer where the bottom for Bitcoin might be. And as a matter of fact, if we take a look at the Bitcoin 1 year running ROI, because if you bought Bitcoin during its high in November, then you might not be too happy with yourself. And it's been a terrible year for Bitcoin returns. But as we can see here, whenever we are at these levels, those were the bottoms for Bitcoin. And the price did turn around every single time. And we also have another chart comparing Bitcoin to the US 20-year government bond yield, which are both very highly correlated. You see, Bitcoin here is on the bottom and the bond yield is on top. And when the bottom yield breaks below this support line, well, historically, that triggered a massive run for crypto. And that's exactly what we are seeing right now. So if the bond yield breaks below that support line, we can have a massive rally for Bitcoin, and then the rest of the crypto market will soon follow. And as a matter of fact, everyone right now is betting on the market going down even more. And considering how far we've dropped below the realized price at the current range, $10,000 seems unlikely, and it might not actually happen. Unless we do get another Black Swan event or World War III breaks out. But even as of right now, the president of El Salvador has started buying 1 Bitcoin every day. And I know that these are typically hard times, but do you guys remember 1 year ago when Bitcoin was at $60,000 at its all-time high, when people were like, oh, I wish I could have bought Bitcoin at $20,000? Well, the opportunity is here once again. So I don't understand what all the complaining is about. These are great times to create wealth. So if you're still bullish on cryptocurrency, Bitcoin, and the metaverse, then be sure to check out my friends at XDAO, as they're helping manage crypto assets in just a few clicks. They are currently having a $10,000 prize pool from BNB Chain, and all you have to do is play their XDAO City Quest, where you can win prizes by reading comics created by AI, following the storyline to save the city, and complete specific tasks to gain points. You can also create your own DAO without coding on their platform. And currently, chapters 3, 4, and 5 are already available, and the faster you pass the rest of the chapters, the faster you can get a free NFT as well. And all the links for XDAO will be in the description down below. As always, please be sure to give this video a thumbs up and subscribe, and do not forget to follow me on my other social media channels. Until next time.